Hello, everyone, and welcome once again to another episode of Selling Greenville, your favorite real estate podcast here in the upstate of South Carolina. I am your host, as always, Stan McCune, and yes, I am a realtor here in the lovely land of Greenville, South Carolina. All of my contact information is in the show notes. I represent investors, I represent owner-occupants, I represent buyers, I represent sellers. Please, if you need anything real estate-wise, I'm your guy. Let me know. And all of that contact information is there for you guys to access. And just a reminder, as always, if you like the show, if you love the show, please subscribe to make sure you don't miss any other episodes. Go back and listen to past episodes. We've got a lot of good content out there. And as well, of course, just hit that 5-star button, leave me a nice little rating, leave me a nice little review. I'd appreciate that. That helps me to encourage me to continue on with the show and to continue to get you guys this content, which I hope you appreciate. So Happy New Year. We are now officially in the year, as I said before. We don't want to say 2022, but nonetheless, or 2022, whatever. Here we are. We're having to say that, and hopefully this will be another good year of real estate. Hopefully this will be a year where we can maybe figure out how to grapple with the pandemic that we've been in now for almost 2 full years. Nonetheless, here we are. And so Happy New Year. We're going to be talking about something that I've been thinking about for a while. Because you guys that know me well know that I'm a realtor and I'm also a landlord. I also own rental properties. I have short-term rentals. I have long-term rentals. I have built a little bit of a rental portfolio over the years, and I move properties around. I don't, sometimes it's best to sell properties. Sometimes it's best to buy. It just kind of depends on a lot of different factors. But I will always have, at least my plan is to always have rental properties. I just think that they are a good investment. In general, you guys know that. And so I'm looking at the rental market and I'm like, you know what? My gut tells me that as we're seeing all this appreciation of real estate, as we're seeing prices go up, my gut tells me that the price of renting is not keeping pace and not anywhere close to it, to be completely honest. That was what my gut told me. But I don't like just relying on my gut. I like to look at the data. And so I decided to dig into some data. And I took a single sample, which was my own neighborhood. I live in the Chartwell Estates neighborhood in Greer. And it's a good neighborhood to operate off of because there are a lot of homes in this neighborhood. I think there's like 360 homes in the neighborhood. So we have a lot of sales and also a lot of rentals. And so we're able to really get a good sample size from this one neighborhood. And also it's a good neighborhood to rent in. It's in a school district that a lot of people are wanting to get into. It is very central to a lot of amenities. If you want to commute to Spartanburg, it's near Spartanburg. If you want to commute to Greenville, it's not far from downtown Greenville. You can basically get anywhere in 20 minutes. It's got a community pool, all these different things. So it's a neighborhood that people want to rent, and it's also a neighborhood that people want to buy in. And so it's a good neighborhood on just from a lot of standpoints to track this. I only went with data from the Greenville MLS. Obviously, there's limited data on rentals in there, but again, with it being this neighborhood, there was more data in this neighborhood than most others. But that's where I based my numbers off of, strictly off the MLS. I did not dig into any other sources, and I'm well aware that there are plenty of other sources. But what I wanted to look at is, what I wanted to look at is the 2-year trend. And so I pulled data from the entire year of 2019. And then I compared that data to the past 6 months, both for homes that are being rented and both for homes that are bought and sold. Now, I'm going to preface this with one thing. I did not filter this for single-family homes versus townhomes, and we do have townhomes in Chartwell Estates. So I didn't filter that on either side. I just felt like, you know what? Obviously, there's a little bit more desirability to rent a single-family home than there is to rent a townhome. But at the end of the day, beggars can't be choosers. And I felt like there was an adequate sampling of each in both the 6-month data set and the 2019 data set that I didn't think it was necessary to filter it out. So here is what we saw. We'll start with the properties that rented. On average in 2019, the properties in Chartwell Estates rented for $1,607.50 per month. And on average, that was a 3.67 bedroom, 2 and a quarter bathroom. Okay, so let's just say basically on average 3.5 bedrooms, 2.5 bathrooms. Okay, we'll just say that for the purposes of the show. That was on average, and the median numbers are very close. The median number was $1,600 per month, 3.5 beds, 2.5 baths. So that's what happened. That's what the rents were in 2019. Well, what were they the past 6 months? Obviously, they've gone up. The past 6 months, the average was $1,717 per month. And the median was $1,750 per month. So the average went up 6.81% in the past 6 months of 2021, which is, even though we are no longer in 2021, my data set came from 2021, basically the last 6 months of the year. We're up 6.81% over the entire year of 2019, and the median was up 9.38% over the whole year of 2019. Now, if that sounds low, it is, because remember, we've been saying that home prices have been going up on average the past 2 years about 1% per month, at least. And so these have not gone up in terms of rental prices anywhere near that. But if you dig into the data, there is a little bit more to consider than just that. So you may have noticed that I didn't mention how many bedrooms and bathrooms we were dealing with. Well, in general, the properties that people are now paying 6.81% or 9.38% more per month to rent, these are smaller properties now. Instead of the average being 3.67 beds and 2.5 baths, now we're at 3.4 beds, 2 bathrooms. And the median, instead of 3.5 bedrooms, 2.5 bathrooms, the median was just 3 bedrooms, 2 baths. So whereas before you might be able to get something close to like a 4-bedroom, 2.5 bathroom rental in Chartwell Estates for, maybe the $1,600 to $1,700 a month range, now you're looking more at a 3-bedroom, 2-bathroom house in the $1,700 to $1,800 a month range. And I broke this out even further. Let's look at the 3-bedroom averages. So the 3-bedroom average house, property, townhome, whatever, in Chartwell Estates in 2019, the average was $1,498, so basically $1,500 a month, and the median was also $1,495. So basically, you could rent a 3-bedroom, 2-bathroom house in 2019 in Chartwell Estates for $1,500 a month. That hasn't gone up very much. It went up to $1,574 on average, and the median actually stayed the same. The median stayed at $1,500. I'm guessing that those are much smaller in general, much smaller 3-bedroom, 2-bathroom houses than they were in the past. The 4-bedroom houses on average were in 2019 rented for $1,716 per month. with a median of $1,700 per month. And that went up between 3 and 4% in the past 6 months to now 1,000. Both the average and the median are the same, $1,772 per month on average and by median for Chartwell Estates. So that's an increase, depending on how you look at it, of either 3.25% or 4.26% per month, with the entire neighborhood being in the 6.81 to 9.38% increase. So all that to say, rents have not gone up a whole lot, but the property sizes have, generally speaking, it appears, have gone down a little bit. The rental that you could get, you can still rent fairly reasonably in Chartwell Estates, but it's not perhaps as big of a house as it used to be. And I think what that means, just kind of as an aside, I think that means that if you buy a smaller house in this neighborhood, it will still rent pretty well. You know, back in the day, people might not have wanted to rent a smaller house. Nowadays, it's kind of a beggars can't be choosers kind of situation where they might not have any other choice. So let's look at prices, right? How have prices changed? And this is also interesting and a bit surprising as well. A few little twists and turns along the way here. So in 2019, the average, I looked at the list price and I looked at the sold price. In 2019, the average list price was basically $260,000. The median was $240,000. So we want to look more at the median. That's more of an accurate accurate metric. I'll still mention the average, but when we're looking at sales, we want to focus on the median, which we've talked about in the past. The average sold price was down a little bit off the average list price. The average sold price was $256,700. The average and the median sold price was exactly what the list price was. The median was $240,000. And our sold price per square foot was right in the $98 per square foot range. Okay, tracking with me? How did that change? Well, interestingly, the average sales price did not go up that much. The average sales price went from $256,700 to $263,000. What is interesting is that the average list price actually went down. So we actually saw the average list price go in 2019 from $259,000 to the past, or a little bit more than $259,000. I've rounded up to $260,000 before. In the past 6 months, the average was $257,000, or really $258,000, $257,980. We'll just call it $258,000. So that actually went down, but then the sold price was higher than the list price, which we've talked about in the past. So those are some interesting little tidbits. Now, looking at the median, which is a more accurate way of looking at this, the median price went from median list price in 2019 was $240,000. And the median sales price was, in the past 6 months, was $245,000. The median sold price, this is kind of a crazy thing, which in 2019 was the same as the list price, $240,000. The median sold price was $270,000, which is, okay, so that's not a big jump, but what's crazy to me is that the median list price was $245,000 and the median sold price was $270,000. Way, way above what people are purchasing the homes in Chartwell for in the past 6 months for way above what they were listed for. So that's a fascinating metric. But it's surprising that the average sold price was only up 2.45% in the past 6 months, in the last 6 months of 2021 versus the entirety of 2019, and the median price was only up 12.5%. The median sold price, 12.5%. We would expect those numbers to be substantially higher, given that these numbers are that these homes are, really relatively cheaply priced given the market, and additionally that the market has been increasing for the past 2 years by, generally speaking, about 1%, and sometimes in some cases more per month. So what are we missing here? What we're missing is the price per square foot, and that's a very important detail. Remember, I said that the sold price per square foot in 2019 in Chartwell was about $98 a square foot. That number in 2021, the last 6 months of 2021, was $143. That is an increase of over 45%. So actually, really the pricing doesn't matter at all. People are buying basically the bigger homes in Chartwell Estates simply haven't been sold as much as they were in 2019. And now basically all the homes being sold were smaller homes for the same prices and for a little bit more than the bigger homes were just a few years ago. So a jump from $98 a square foot to $143 a square foot. That is an absolutely insane jump. 45%. So what do I gather from this? Rents are not coming anywhere close to keeping up with sales. And that is great. If you are a renter or if you're contemplating renting, that's a really good sign. You are probably not going to just get immediately priced out. Now, at some point, this has to correct, right? At some point, the rents are going to go up. It is only a matter of time. It has to happen. Like the money doesn't just grow on trees. And when the prices of homes are going up, the prices of rentals are also going to go up. But this explains the fact that the sales price stayed relatively close, didn't go up by that much. I mean, it went up by 12.5%. That explains why what we've been talking about, which is that smaller homes are now more what are being sold for just a little bit more than what the bigger homes were a couple of years ago. And I think the rental properties are reflecting that as well. The rental properties now are smaller. They're not that much more expensive, but they're smaller than they used to be just a few years ago. In fact, even the 4-bedroom sample size from my rental property search did not have any half bathrooms. Half bathrooms are a really good metric, actually, to determining the size of a house, because a 4-bedroom, 2-bathroom house is typically dramatically smaller than a 4-bedroom, 3-bathroom or a 4-bedroom, 2.5-bathroom house. Because if builders really, and homeowners really want to fit that half bath in somewhere, that powder room in, so that you don't have, people that need to go to the bathroom don't have to go into a room that has the shower or the bathtub. It's really inconvenient in a lot of ways. And so if they can't squeeze that in, it tends to indicate that it's a smaller house. And that is exactly what we're looking at in these numbers. The average 4-bedroom house that was rented in Chartwell in 2019 was 4.3 bedrooms and 2.5 baths, whereas the average house that rented for about 4% more was only 4 bedrooms and 2 bathrooms. And so rents are staying a little bit flatter than we would expect them to, but the homes are smaller. Pricing is staying a little bit flatter than we would expect it to, but the homes are smaller, and the price per square foot is skyrocketing. And so these are all very important details to consider. All in all, I think that this is going to have a profound impact on the market. What I'm curious to see is once some of these bigger homes in Chartwell start going back on the market, what will happen? I don't think that owner occupants will be able to rent them out. I don't think so. I think that these will have to be sold. And there's been some angst, because I know this because I live in this community. It's some angst about how many properties in Chartwell are rentals. Well, I think we're coming to the end of that. I think that is part of what I'm reading in this data, is that Chartwell will not be able to afford rental properties for much longer. People that are looking to purchase rental properties, they have a short window of opportunity before they are priced out of Chartwell estates. And that may go for the broader Riverside area of Greer. Who knows? We have to, again, as I always say, we have to follow all of this data closely, and it's all worth considering. Short episode today, but that's all that I have. I thought it was a very interesting study, an interesting data set to look at. Hopefully that will help you to better understand how the rental market compares to the sold market and how that has changed over the past couple of years. And if you did like it, please hit that 5-star button, rate the episode and the show with a high rating. I appreciate that. If you guys do that, if you can leave me a review, I would also greatly appreciate that. Subscribe, download the episodes, and all of my contact information. As always, because I'm a realtor and I plaster my contact information everywhere, it is in the show notes. Reach out to me with anything that you guys need. And here's to the year of our Lord, 2022.